will do, I will share my PPT with you. So I hope my PPT is visible to each one of you.
Yes, sir.
Okay, thank you. Thank you for this confirmation. So we will start with our today's PPT. So this will be the coverage which I have envisaged. Introduction to inventory valuation, then international valuation standard effective from January 2022 with a particular reference to a new chapter on inventory. And then I have covered briefly on this Ind AS or Indian Accounting Standard 2, which is on inventory. So inventory, as we know, as per accounting standard, their conservative approach is adopted. So according to accounting standard, inventory. Neeraj ji, may I request you to mute yourself? Thank you for that. So as we are aware, in accounting, actually conservative approach is adopted, and inventory is shown either at cost price or net realizable price, whichever is lower. So that guidance is provided in accounting standard world over, because there actually profit will be recognized or profit will be taken into books of account only when it is actually realized. But any loss on inventory, that will be recognized immediately. So that is the principle of accounting which is adopted world over, and it is part of Ind AS 2 also on valuation of inventory. And as we are aware, this Ind AS 2 is based on IFRS, that is International Financial Reporting Standard. So that is world over, this principle is accepted. But man, as a valuer, as a registered valuer or as a professional valuer, when we are undertaking a valuation of inventory, then we will have to ascertain the fair value. So fair value, their principles will be different. So that will be totally different than the cost price and the net realizable price. So what are the differences that we will try to find out in next 120 minutes or so. So we will start with primary introduction or preliminary. So where is the need for inventory valuation? So these are the areas where inventory valuation is needed. Number one, a financial reporting purpose. So every quarterly basis or half yearly basis or every yearly basis, depending upon the accounting period adopted by each business entity, accounts are closed. So there actually we have to see, we have to show or we have to reflect the value of inventory. So that is the prime purpose, financial reporting purpose. Then we have these mergers, demergers, and business acquisitions. So there, as we are aware, in purchase price allocation or a PPA, we are required to ascertain the fair value of the inventory. So there, that will be needed. Insolvency resolution and liquidation. So CIRP process, various processes under IPC and liquidation. So there a registered valuer will required to ascertain or estimate the fair value and the liquidation value as per a CIRP regulation. And as per a liquidation process regulation, a registered valuer need to ascertain the net realizable value. So these are the requirements mainly under IBC. Then tax reporting purpose, if we search on internet, you will come across many case laws relating to reflection of inventory either in tax report, tax returns or in financial statements. So for a tax reporting purpose also, it is very important. For transfer pricing issue, between related parties. So there also this valuation of inventory is required. And for a borrowing purpose, so we are aware whenever this loan on working capital is taken from the banks or financial institutions, so there invariably this inventory is offered as a collateral. So there also valuation, or rather a periodic valuation of inventory will be required. So these are the areas where actually valuation of inventory will be required. And this list is not exhaustive. This list is just for illustration purpose. Apart from these also, there may be many other areas where a valuation of inventory may be needed. So this is just illustrative list. Now, what is the significance of inventory valuation? So if we open the balance sheet, or if you refer to the balance sheet of any business entity, then inventory you will find inventory will be probably the largest asset under current asset, and one of the major value or highest value asset overall, means both taking a fixed asset and the current assets together. So it is its importance goes without saying. That is the means largest asset in balance sheet of a business entity. And cost of goods sold, that is the highest expense in the income statement. So one financial statement, it is the largest asset in balance sheet, and another financial statement, which is income statement. So cost of goods sold is the highest expense in income statement. So keeping this in mind, even a minor change in a value of inventory, it can result in very big change in profitability of the company. So depending upon the turnover, this amount can be very high actually. So what I will do, I will show you one practical example. These I have taken from the balance sheet of BPCL, or Bharat Petroleum Limited. This I have taken from financial year 1920, that is 2019-20. So as we have seen in the beginning, this inventory is shown in the books of account either at cost price or at net realizable value. So in 1920, that year we cannot forget in our lifetime, because we are aware in March 2020, this nationwide lockdown was imposed, not only in India, but across the globe. So entire means country came to a standstill. So Bharat Petroleum Corporation Limited, it was compelled to revalue its inventory at net realizable value. So what is the effect of that? Because see, if you recall, during that time actually, there was a negative pricing on crude oil. Probably in our lifetime, we may not come across such a situation. As we are aware, the crude oil prices in international market is very high. Around 85% of our requirement of petroleum products that we import actually. So minor change in pricing of crude oil or a petroleum product, it affect very huge. It is having a very huge impact on the economy. So that means during that time actually there was a negative pricing, meaning thereby that normally actually buyer will pay consideration to the seller. In that case it was reverse actually. The seller was ready to pay some consideration provided there is a buyer and he is ready to uplift the product. So that kind of situation probably we may come across in our lifetime. So because of that very means whatever purchases were there of BPCL, that was at a higher price, and due to sudden lockdown, actually the prices of crude oil went down in the international market. So they were actually forced to write down the inventory at a net realizable value. So what was the impact? So impact of that was 81 crores approximately. So that was the impact. This is annual report of BPCL, note 69. So there they have clearly mentioned that due to COVID-19 a pandemic, there has been significant volatility and a sharp reduction in the prices of crude oil and petroleum products, which has resulted in a significant write down of inventory to NRV or net realizable value. So accordingly, a corporation has shown an amount of 1081 crores as an exceptional item in this statement of profit and loss. So this was with reference to BPCL. I have purposefully not shown the impact on my ex-employer, that is Indian Oil Corporation. You will be surprised to know the impact due to this reason was 10,000 crores plus. So means you can very well imagine the impact of this this standard or a guidance which is provided in the accounting standard. So in case of BPCL, it was 1081 crore, but in case of Indian Oil, it was 10,000 crore plus. So this was the practical example on the significance of inventory valuation. Now, actually, this is just for your information how big inventory numbers can be. So, Indian Oil Corporation, as at 31st March 2022, means at end of last financial year, it was having an inventory of 1,03,000 crore plus. So in India, you can imagine how many countries or how many companies will have this turnover of 1 lakh crore plus. So here is the case where this inventory is 1 lakh crore plus. So that is the importance of the valuation, and that was around 75% of the total value of current asset. So that is the significance of inventory. Similarly, in case of Reliance Industries Limited, it was 46,000 crores around, and BPCL it was 36,000 crores, and HPCL it was 35,000 crore. So these numbers will tell you we have to be very careful in valuation of inventory in our real assignment. We cannot take inventory valuation lightly. So these are the numbers, and there is a reason for this maintaining very high inventory. Because as I told you, we import around 85% of our petroleum products. So always actually there some buffer should be maintained by the oil companies because the global situation, as we are aware, our current time is full of uncertainty. Presently, there is ongoing war between Russia and Ukraine. And Russia, as we are aware, it is the largest supplier of oil and gas, or largest exporter of oil and gas. So that impact we can very well imagine. So apart from that, there are tensions between China and the US on the issue of Taiwan, and means we will not go into detail. In short, actually, means global uncertainty is on very large scale. So that is how these large inventories oil companies are forced to maintain. Now, these are the types of inventory. So, for wholesalers and retailers, they will maintain only finished goods inventory. So, comparatively for them, it is means easy because they will always get some value from the market because they are the trader and that only finished goods inventory they maintain. So as I can see, Mr. Parthaji has raised his hand. So any question,
Yeah,
Parthaji?
sorry to interrupt, sir. I just have a
Yes, sir.
question about the inventory of the oil company. That
Yes,
what
sir.
is the breakup of, the raw material and work in process inventory and finished goods? Is there any guidelines, thumb rule
Okay, okay, okay.
available, sir?
So, sir, actually, we will see it from the reference of a refinery, sir. So, any refinery around 85 to 90% cost, it is relating to crude oil and natural gas, sir. So, crude oil and natural gas. So, natural gas is used in the refining process also and as a fuel also. There are different usages of natural gas. So around as a thumb rule, we can say around 85 to 90 percentage raw material is of crude oil and natural gas in a refining process. And
Thank you, sir.
finished.
I've got one more question because I have done a valuation of the tankage facility of a refinery,
Okay, sir.
not the asset, not the inventory.
Okay,
So,
sir.
there, when you say the raw material, there's a crude, the crude tanks can possibly hold 50,000 meter cube of this one. So this 85% of crude, are you talking about those who have been held in the tankage facilities or outside as well?
Sir, outside as well, sir. As I told you, we import around 85 percentage from outside, sir.
Okay.
So, like in Gujarat, sir, we are having import facility, crude oil import facility at Wadinar port and in Mundra port, sir. So, from Wadinar and Mundra, cross-country pipelines are originating, sir. So from Wadinar, actually, crude oil is supplied to three refineries. That is Gujarat refinery at Vadodara, then Panipat refinery in Haryana, and Mathura refinery in Uttar Pradesh. And from Mundra, it is supplied to Panipat refinery exclusively. So like that, we have import crude oil import facility at Haldia port also and at Paradip port in Orissa. So in Paradip port, it is newly created. So this I am talking about the public sector oil companies. Apart from that, Reliance is having their
Okay, thank
own.
you, sir. This will do. That enough information for me, sir. Thank you.
Okay. Thank you, sir. Thank you. So we will go ahead. So these wholesalers and retailers finished goods inventory. Mainly they maintain a finished goods inventory, and in case of manufacturers, they maintain three types of inventory. That is raw material, works in progress, and the finished goods inventory. So raw material and finished goods inventory comparatively valuation, you can get some reference from the market. But work in progress, actually, valuer need more consideration because it will require allocation of overheads. And so there actually valuer needs to be more particular. So these are the types of inventory and inventory valuation methods. So there are different inventory valuation method like FIFO method, that is first in, first out, a weightage average cost method, last in, first out, that is LIFO methods, and specific identification method. Specific identification method is deployed when actually one entity is doing a special project, means supposing a builder, now he is actually a builder will execute a number of different projects. So he will maintain inventory project wise. So that is just one example. So that is actually a specific identification method. Now, choice of inventory method, it affects the financial statement and relevant financial ratios based on it. So a choice of inventory method is also very important. Now, actually, again, I will take you through one practical example, which is relating to inventory valuation of IOCL or Indian Oil Corporation. So these I have taken from the annual report of the IOCL. So this significant accounting policy, as a valuer, we can get a lot of knowledge from the annual accounts. So we should make it a point to go through the significant accounting policies of the reputed companies, or at least reputed listed companies, and from that we can gain a lot of knowledge relating to valuation subject. So this is the this extract I have taken from the annual report of IOCL for financial year 1920. So there is a separate para on valuation of inventories. So as we can see, this raw material and stock in process. So that includes the crude oil, as I informed you just now. So raw material, including crude oil, that are valued at cost determined on weightage average basis or net realizable value, whichever is lower. A stock in process, it is valued at raw material cost plus conversion cost. Now, to ascertain this conversion cost in a company like Indian Oil, it's a very challenging assignment, I will say. That way, in any manufacturing company, to ascertain this conversion cost is always a very challenging assignment. Crude oil in transit, so it is valued at cost or net realizable value, whichever is lower. Initial cost of inventory, which includes the transfer of gains and losses on qualifying cash flow hedges. So as I told you, means a majority of our requirement is imported, so their hedging will be required. We are aware the fluctuation in foreign exchange, particularly is the depreciation of rupee at present against US dollar. So that continuous hedging will be required by the Treasury Department of a large entity. So here that is how it is reflected. So initial cost of inventory include transfer of gain and losses on qualifying cash flow hedges recognized in other comprehensive income in respect of the purchases of raw material. So this is about raw materials and stock in process, how valuation is done. In respect of finished products and stock in trade, so finished products and stock in trade other than lubricants are valued at a cost determined on a FIFO basis or a net realizable value, whichever is lower. And cost of finished products produce is determined based on raw materials cost and processing cost. Then moving on, these lubricants are valued at cost on a weightage average basis or net realizable value, whichever is lower. Imported products in transit are valued at cost or net realizable value, whichever is lower. And stores and spares, so it is valued at weightage average cost. Means a specific provision is made in respect of identified obsolete stores and spares and chemicals for likely diminution in value. And further, a provision of 5% is also made on the balance stores and spares. So these are the methods of valuation of inventory. And as we can see in a single business entity or in one company, for different types of inventory, different types of valuation methods can be adopted. So that is about inventory valuation methods. Now, these are the formula, these are the important ratios which we consider based on the information provided in the financial statement. So, important ratio is on inventory turnover. So, inventory turnover measures the number of times a company has sold and replaced inventory over a given time. So, the higher the inventory turnover rate, the more efficient a business is at getting through its inventory. So, this is the formula which we all are aware. So, the efforts or the endeavor of any company will be to means maintain a very high inventory turnover ratio. So, if you take example of a FMCG company, so FMCG company will have a very high inventory turnover ratio. And if we take example of a real estate company, so real estate company, as we are aware, it takes its own time. So there we may find this inventory ratio at means low side. So that is just examples of inventory turnover. Now, days of inventory outstanding. So that is also another measure. So days of inventory outstanding, it measures the typical number of days it takes for inventory to turn into the sales. So means it is hard to draw insight from just one calculation. So getting insight into typical industry standard may help in the analysis. So that is also another measure of how efficient a company doing in inventory front or inventory. As we are aware, it is a major part of working capital. So how efficiently company is doing in the working capital. So a insight can be obtained from analysis of that. Now, this is safety stock. So safety stock, again, it is very important for any trading or manufacturing company because means if sufficient inventory is not there, probably company will lose its customers. So safety stock, again, it is very important. So as we are aware, it is a backup stock to meet the unexpected supply problems and sudden changes in the demand. So I gave you example of oil companies. So they maintain a very high levels of safety stock. So it's always desirable to have enough safety stock to meet unforeseen demand, if any. So this is just the formula for the computation of safety stock. So it is a maximum daily sales volume multiplied by minimum lead time less average daily stock volume times the average lead time. So this is a safety stock. Moving forward, reorder point. So that is also very important aspect. So reorder point helps to determine when to order new inventory, and it is a specific point in time that acts as a trigger to reorder as soon as a stock has diminished to that certain level. So this is again very important. And economic order quantity. So means the pressure on the management is to maintain a proper level of inventory. Neither it will result in a blockage of funds, nor it will result in a shortage of product. So for that, actually, this economic order quantity that plays a very significant role. So economic order quantity is a formula that helps exactly how much inventory to order. So it takes into consideration an entity's typical demand, ordering cost, and carrying cost to provide the most economical figure. So that is square root of ST divided by H, where D is demand in units, S is ordering cost per unit, and H is holding cost per unit. So this is just one example of arriving at the economic order quantity. Apart from these, there are many methods through which we can arrive at the economic order quantity. Now we will move to this international valuation standard, latest edition, effective from 31st of January 2022. And we will also have a glimpse of a new chapter on inventory. So this is the summary of changes to IVS 2020, effective from 31st January 2022. So I hope you means all of you have downloaded a copy of latest version of IVS which is effective from 31st of January 2022. It is freely available on the internet. So since as Kajal madam told in the beginning, this Divya Jyot RVO that has adopted this international valuation standard. So whoever are the members of Divya Jyot RVO or that way any other RVO in India, there are 16 recognized RVO, as we all are aware. So the RVO which has adopted this IVS, so it is necessary for the members of RVO to have a latest version of international valuation standard. So this core principle, so a list of core principle for a standard setting and valuation has been added to the introduction. So
Sir?
this was, yes.
Sir, can you please tell me, it is whose jurisdiction, like whether it is the whose jurisdiction is to do the valuation of the inventory? Is it the SFA valuer or the plant and machinery valuer or the land and building valuer? Whose jurisdiction it is?
So, sir, actually, in the beginning, I took up that point. If you have actually heard me, sir. Actually, as I told you, sir, at present, there is no clarity on that because, see, sir, in other countries, developed countries like US, Canada, Singapore, and all, there are no asset classes, sir. But in India, we have made asset classes. So, plant and machinery, land and building, and this SFA. Now, inventory is, I believe it is a technical subject, sir. Like I gave an example of valuation of a petroleum company inventory or a valuation of a goldsmith who is dealing in ornaments of gold. So probably all these three asset class will not be competent to do the valuation of precious metals like gold and gold and silver and all. That way, a precious artwork also probably these engineers and accounting or professionals having a background of engineering and accounting, they may not be able to do it. So best alternative is, sir, wherever that real estate inventory is there. So naturally, it will be done by the land and building valuer. Wherever that inventory is relating to the plant and machinery, because there are many companies who are dealing in plant and machinery. So probably that will fit into the plant and machinery valuer. And means wherever actually the appointing authority is appointing a particular class of valuer, then he will have no other alternative but to take the help of experts. So he can rely on the valuation report given by the expert. So that liberty is there under the company's registered valuer and valuation rules. So that is means a valuer, supposing means a land and building valuer, a company which is dealing in real estate. So naturally, it will have some investment also, or SFA, or security of financial asset also. So there he can very well inform the company or his customer or client that I will take assistance from these expert or these valuer for valuation of this. So that can be set out in the engagement letters. So I hope it is clarified, sir. Any further questions?
Thank you. Thank you so much, sir.
Okay. This glossary or the interpretation part or the meaning of important terms, so that has also been extended. A framework, so two clauses have been added to explain what is meant by compliance with the standards and when the departure may be made. So other changes indicate that an individual or group of individuals responsible for preparing a valuation must be appropriately qualified, competent, unbiased, and act ethically. So all this is very important means additions to the framework. Now IVS 101. So as we all are aware, under IVS there are types of two types of valuation standard. One is the general standards and another is asset standard. So general standard, as we are aware, it is IVS 101 to 105. So there are 5 general standards which are applicable to all types of valuation. And the asset standard, there are 8 asset standard. So this IVS 101 is a general standard relating to scope of work. So scope of work, I always say it is the heart of any valuation assignment. So that has to be decided. So that scope of work is amended. So valuer preparing valuation for their own employers are new or are now referred to as the employed valuers, and valuers preparing valuation for a third party client are called the engaged valuers. So this is the new concept in this new edition of the IVS. So hitherto what we were believing, a valuer can be outsider only. But like a charter accountant or cost accountant or engineers are employed by a company, so that is internal. So now they're going forward, actually big companies like Reliance or Tata's, they can employ a professional valuer. So that valuer will be in the employment. So based on these in future opportunities will come. So valuer is not always external party going by this latest amendment. It can be an employer also. A registered valuer can now be an employee also. So that is a new amendment. Then basis of value, again this is a general standard IVS 104. So a selection on allocation of value has been added. Then we have this IVS 105, which is on valuation approaches and methods. So their wording has been reinstated to clarify that market income and cost approaches are not exclusive and may be used in any combination. So meaning thereby means a valuer is at liberty to use either one valuation approach if he is confident that whatever data or whatever documents are there, that is sufficient. He is confident, and whatever valuation estimation he has arrived at, that is more or less correct estimation. So there he may not require to use the multiple valuation approaches. But in cases where he is not confident, then he will use multiple approaches. So valuation approaches, as we are aware, there are 3 valuation approaches which are recognized world over. That is MIC or market income and cost. So a valuer will either use one valuation approach or multiple valuation approaches, or he may use one approach and multiple methods into it, or a combination of that. So that is the new amendment under this IVS 105 valuation approaches. And then we have this IVS 200, businesses and business interests. So it is relating to mergers and acquisition or business combination. So their introduction has been amended to better describe the scope of the standard. And IVS 230, again, this is a new chapter as we have seen repeatedly. So this is a new standard and addresses the valuation of goods that will be used in future production, work in progress, and goods awaiting sale. So it excludes real estate building under construction. So we have to keep in mind this IVS 230 is not applicable to the real estate inventory or inventory of real estate projects. And again, IVS 400, which is related to real property interest. So their introduction has been amended to provide additional clarification of what these standard covers, including the valuation of agricultural land and unregistered land. So this was not there. Now this clarification is provided under IVS 400. So before we move forward, what I will do, I will take you through this amendment in IVS itself so that we can have more clarity. So just give me a minute, I will share this. This is a new book effective from 31st January 2022. So whatever changes we have seen, those changes are incorporated here. Now, going by these, it will be very difficult for us exactly to know which are the amendments which have been made in this particular edition of the means IVS. So for that, actually, this I am not aware whether you have come across this or not. This is also available on internet. So here, basis of conclusion. So as we are aware, whenever some changes are made to the important law provision or standard, the regulatory authority, it provides a discussion paper. So it will always invite comments from all the stakeholders. So a similar exercise is done for this IVS prior to amendment. So this is the basis of conclusion, and this is reflecting changes introduced to IVS effective from 31st January 2022. So that this is a 47 pages booklet, which is also available on internet. You can download it. Now here, as you can see, whatever changes have been made, those changes have been reflected in red letters, so that identification is very easy. So this is very important. Now actually, we always now actually it is era of automation. So under valuation also there are many valuation, automated valuation model is available. So what is the meaning of automation, automated valuation model? So means on that, actually this IVS had invited public comments, and there were variety of different public comments. So for now, actually, they have avoided providing meaning of what is automated valuation model, or a social asset, or a social valuation assignment, or valuation engagement. So this is very important. As a consequence of this outreach, the board decided to delay inclusion of definitions of automated valuation model, model itself, or social asset, or social value and valuation assignment, and the valuation engagement. So going forward, we can have a meaning of these in IVS itself, but for now it is not included. So including may I request? May I request? Neeraj ji, may I request? Please mute yourself.
सबसे ऊंची
Any questions, Neeraj ji? So This means as a consequence of this, meaning of these new terminology like data management and governance also, that is not incorporated in this. And this is very important, IVS 30 inventory. So inventory broadly includes the goods which will be used in future production processes, that is raw material, part and supplies. Goods used in production processes, that is work in progress, and goods awaiting sale, that is finished goods. Should be defined as those liability requiring a non-case performance obligation to provide goods or services. So a valuation board have therefore excluded real property from the scope of IVS 230, and the numerous and varied aspect of real property inventory were not considered or contemplated in the preparation of these standards. So going forward, we may have more broad guidelines on valuation of real estate or real properties also. So this is see this, as I told you, this core principle of valuation standard setting. So this entire means chapter on this is added now. So here actually jurisdiction, this is very important. Departures from the standard to comply with legislative and regulatory requirement that are in conflict with the standards are allowed. So this is very important. And here we can take an example of liquidation process regulations under the IBC. So that liquidation process regulation, it specified that a registered valuer will ascertain a net realizable value as per a company's registered valuer and valuation rules 2017. So that is prescribed under a regulation, that is a statutory requirement. So that departure is within the scope of this IVS. So we have to be very clear whenever some specific requirements are there, like in a majority of FEMA regulation, it is prescribed that valuation will be done according to DCF method. So there actually necessarily valuer will do valuation going by the DCF. So that those conflicts are now clarified. So that is number one. And these types of value or basis of value, which is very important. So valuers must select the basis or basis of value appropriate for the assignment.
नक्शा पास इतना आसान नहीं ना है सर, दुनिया का सबसे कठिन काम नक्शा पास होना हो गया है।
Neeraj ji, may I request you to please mute yourself, Neeraj ji.
सर मेरी सभी से रिक्वेस्ट है कि अगर आप क्लास अटेंड कर रहे हैं तो क्लास पे फोकस करेंगे।
Thank you. So we will continue. So basis of value. So valuer must select the basis of value appropriate for the assignment and follow all applicable requirements. So the basis of value must be either defined or cited. So that is.
तैयारी करेगा नहीं बैठ पाएगा ना सर तो हम फिर से दे देंगे क्योंकि जब
सर मेरी रिक्वेस्ट है जितने भी पार्टिसिपेंट्स हैं प्लीज डोंट डू अदर थिंग्स प्लीज
हमारे पास ये करीबन
intended use, that is very important.
तो हम 40 लाख अपने से एडजस्ट करते हैं
तो कहाँ भेजना है अमेरिका कौन सी जगह?
Ask the participants to mute. बीच में noise बहुत है.
So these are a new addition. This intended use. While again and again, नीरज जी आप क्यों अनम्यूट कर रहे हैं बार-बार अपने आप को? Intended use. So valuer must disclose or report a clear and accurate description of the intended use of the valuation. So this is a new requirement which is added to IVS. So in all valuation report, this should be reflected. Intended users. So this is very important. There are many controversies on this. Who exactly are the users? So that is also should be clarified in valuation report itself. So intended user, valuers must disclose. नीरज जी आप क्यों बार बार अनम्यूट कर रहे हो? मैं आपको
मारेगा
mute कर रहा। I think organizer will have.
नहीं उसे ना बोल रहे थे कि अरे आइए गुप्ता जी
मैडम काजल
पार्टी होते हैं
मैं म्यूट कर रहा है, आप अनम्यूट कर रहे हैं नीरज जी। चलिए हम आगे बढ़ेंगे। So this
चाय तो भाई बहुत बढ़िया आ गया, मजा आ गया चाय पी के।
I think शर्मा जी आपको मीन्स एडमिनिस्ट्रेटिव
आपने
पावर
चाय
यूज
पिला दिया
करने
बढ़िया,
पड़ेंगे।
इसमें आप विजयी भव।
नीरज जी प्लीज अगर आपको नहीं अटेंड करना है आप सेशन के बाहर चले जाइए प्लीज।
Intended users, this is a new requirement, and as we are aware in many cases these controversies have arisen. So in case of Kingfisher airline, as we are aware, the financial institutions or bankers, as per going by the news report, so a major amount was had been given on loan to Kingfisher Airline based on a valuation of intangible asset like a brand equity. So in that case, the valuation was done by a reputed valuation firm, and there actually thereafter when this Kingfisher Airline borrowed money from the banks and it failed to repay it, then all types of investigations had commenced, CBI and all, going by the news report. So there a question was asked to the valuation firm, why, on what basis you have done this valuation of brand equity. So there they clearly mentioned, going by our scope of work, whatever valuation exercise we have done, it is for the internal consumption of the company or the officers of the company. That valuation was not meant for borrowing money. So who are the intended user? That is very important, and it should be mentioned in the valuation report. A scope of work, again, that same example we will take, that scope of work. So valuers must determine, perform and disclose or report a scope of work that is appropriate for the assignment. So that is also very important. Then identification of a subject of valuation. So valuer must clearly identify what is being valued. So that is very important. So this is a new addition. Apart from this, as we can see, this means on the this we have seen earlier also. On the basis of the above, the board decided not to include the following definition. So automated valuation model, a limited scope engagement, social asset, social value. So all these are not a part. Now valuer, as we have seen, that the definition is amended as we discussed. So a valuer is an individual, group of individual or individual within an entity. So regardless of whether employed, internal or engaged, that is contracted or external. So means now companies can employ registered or professional valuers also. Now valuation, what is the definition of valuation? Value, this new addition, it is very important
Yogesh
now.
Sir.
Yeah.
Yogesh sir.
Yeah.
Can I ask a question? Can I ask a question?
Please.
Yogesh sir, you just, if you can go back to the previous slide where you mentioned about the definition of valuers.
Okay.
And if I understood correctly, you mentioned that now employees can also do valuation.
Yes. So that is the.
Sorry, go ahead.
So that is the new amendment to this IVS. So earlier, actually, traditionally, what we were understanding, only external professional can become the valuer. But now, actually, as firms are employing chartered accountant or post accountant or engineers, so now going forward, this scenario may also come based on these amendments. A registered valuer can be employed by big companies like Reliance, Tata companies who regularly require a valuation for one event or one activity or other. So this type of liberty is there within IVS now. But the condition is that registered valuer, while doing the valuation, he will comply with the IVS. So that is the condition now. You will have to unmute, Prakashji.
Sorry. Yeah. So just sharing a thought here. A valuation exercise is always done by an independent person. And now if an employee does the valuation, that independence part will actually will get impacted. So
it will remain, sir. See, internal auditors are there. That is also very professional. So internal auditors are employee only, but they follow the internal audit standards. Sir. So means it is not that once employee he will do means what management say to them. Like you take an example of a corporate hospitals. So corporate hospitals doctors are also professionals. Sir. So they go according to what is prescribed in medical books. They don't go by what is said by the management of that corporate hospital. So these actually, that is how I stress this. Going forward, we will come across this, a valuer. And that is how I also clarified the valuer will follow this IVS by doing the IVS while doing the valuation when he is employed. So once it is done, that independence and all that will be maintained, sir.
Okay. Thank you, sir.
Yes.
Sir, one question.
Yeah, please.
If a registered valuer is engaged by, say, any firm, any company, and if it does the valuation, will this valuation report will be given due cognizance by the bankers or any financial institutes?
Yes, sir. See, now actually employee can be valuer. Yes, sir. So once that he is giving a valuation report duly complied with the valuation standard, then that recognition will be there, sir. Will always be there, sir. So that is not a question. Actually, this is a new development. So these discussions are taking.
Being an employee of the company, will this valuation report will have the integrity, proper integrity?
Why not, sir? He is discharging his professional duties, sir.
Sir, he is basically taking salary from a company, and can he discharge? Can he say no? If his employer say this value will be 5 crores, he can't say it is 4 crores.
Sir, again, I will repeat, see, sir, there are many professionals which are the employees of the company. I gave you the example of internal auditors. So supposing an internal auditor is finding some irregularities either in operational activities of a company or accounting or reporting. So he is, as an independent person, he is supposed to report it, sir. And that is how, sir, sir, just give me a minute since you have asked me the question. There can be, sir, a methodology to make him independent. The concern is about the independence of a professional. So internal auditor, as you are aware, sir, they are reporting directly to the audit committee of a company, sir. So once he sees, sir, this valuer as an employee that a small company cannot afford. It will be done by the major companies, major entities, sir. So all these major entities are listed entities. So they have to necessarily comply with all the regulations, sir. That insider trading also comply with the SEBI regulation on insider trading. So there is a role is different, sir. That way secretarial role, these are professional only, sir. So their role is different.
Sir, we understand, but how can a valuer be independent when he is taking salary from that company?
Sir, that mechanism will be derived by the company. See, this valuation standard is amended now. That is the reality. Now, that is for the management of the company, how his employment terms are fixed so that he can do his work independently. Because ultimately, he is supposed to comply with the valuation standards. That is the basic requirement. And if you go through the IVS, sir, it is clearly mentioned if a valuer is taking instruction or direction or a particular position based on the requirements of his client, then that valuation report will not be treated as IVS compliance. So all these means check and balances are there within IVS.
A valuer will be thrown out of the company if he doesn't follow his instructions of his superior.
Sir, see now actually that way, sir, if external valuer means, can we say he is 100% independent, sir? That depends
At least,
upon the.
sir, at least there are chances of he's being independent. But the person who is taking salary on a regular basis, how can he be independent?
No, sir. Supposing you visualize a company like Tata's, they have their own ethic values. So they will not interfere in a work of a professional, sir. I don't think so.
Sir, you are no more a professional when you are taking salary.
No, it is not that, sir. If means internal auditor, I gave you example of doctor. If he is taking instruction from his corporate management, will he be able to perform his duties, sir? Ultimately,
role of an internal auditor in a company is to see whether all the rules and regulations are being followed for placing an order or something. So it is actually his duty is to keep a vigil on the entire this proceedings.
True, sir. So likewise, a valuer, a professional valuer, he will do valuation as guided as per the valuation standard, sir. That is as simple as that.
So they report to the top management.
Huh?
They report to the top management.
Yes, he will report to the top management. I gave you example of internal auditor. They are reporting directly to the audit committee in the company. Audit committee are consisting of independent directors, sir. So that way, any these modalities can be framed, sir. It is for the company and valuer to decide. If we discuss on that, that will be endless discussion, sir. According to me, we will not go into nitty-gritty of that, sir. We will see what is the guidance provided in the IVS. And IVS, as Kajal madam told in the beginning, it is consisting of so many reputed organizations. So like we are raising concern here, they also had a discussion on all these concerns, sir. And after that, this IVS is amended, sir. So these discussions will be endless, sir. We will not go into detail of that, sir, because time is limited, sir. We will see what is guidance given in the IVS, sir. So I hope you will permit me to go ahead, sir. Valuation, again, this is a new, and see, this is it is not that I am providing this. This is the if you refer this new valuation standard. See, I am taking you this January 2022. So that means if you go through this definition. It is good that we have this healthy discussion on this, and I was expecting it actually. So it is always good to have a discussion. But see, I will take you through this valuation, valuer definition in this. So see, sir, this 2030, you may refer to para 2030. Valuer is an individual, group of individual or individual within an entity. So, sir, it is there in new definitions of within an entity, regardless of whether employed, internal, or engaged, contracted, or external, possessing the necessary qualifications, ability, and experience to execute a valuation in an objective, unbiased, ethical, and competent manner. So in some jurisdiction, licensing is required before one can act as a valuer. So I hope you will get answer to all your queries from this definition, sir. Baki that nitty-gritty how his independence will be ensured. That is the means that should be done between the valuer and the employees. So that we will not go further into it, sir. Otherwise, we will miss many important areas. Compliance with standards. So, in order for a valuation to be compliant with IVS, the valuer must comply with the requirement contained within the IVS. So, this will also give answer to your. So, in order for a valuation to be compliant with IVS, the valuer must comply with the requirement contained within the IVS. So that is also very important. And a valuer can only depart from an IVS standard as described in section 60 below. So that section 60 is related to whenever I gave you example, whenever some specific guidance is provided under the statutory laws or regulation, only in that scenario he can deviate from IVS. Otherwise, whether he is employed or not employed, he has to follow the IVS. So that is there. Now, one more thing I want to show you is on IVS approaches. Apart from this, all these changes have been made. So here, see, valuation performed. This standard is intended to apply to a wide spectrum of valuation engagement and assignment, including valuation performed by valuers for their own employers. So that is also now part of these standards, sir. And this is investigation. There are no changes. Reporting, there are no major changes. But I want to show you specifically these approaches, because in our real life situation, we come across that very frequently. So this is 105 is on valuation approaches. So as we are aware, world over presently, 3 valuation standards are recognized: MIS or market income and cost, MIC. So actually discussions were held to add one fourth approach, which was hybrid approach. So hybrid approach uses one or more a combination of the market approach, income approach, and a cost approach, but cannot be easily categorized as one of the existing valuation approaches. So in original discussion paper, this idea was floated to add a fourth valuation approach on hybrid approach. But after a very wide range of discussion, the ultimate decision of the board is this. It is highlighted a green underline. So board discussed this issue further and consulted the IVSC Advisory Forum Working Group, IVSC members and other stakeholders. Further consultation, the board agreed that rather than including the hybrid approach, the introduction should be revised to clarify that one or more valuation approaches can be used to provide an IVS compliant valuation. So as a result of these deliberations, the board have not included hybrid approach within IVS, but have revised the introduction as follows. So here is the introduction 10.1. That para is now amended, and it also provides that one or more valuation approaches may be used in order to arrive at the value defined by the appropriate basis of value. So this is also a very important guidance provided into it. And I will since time is less, I will skip further guidance from this. I request you to please download this basis of these amendments. It is very helpful and it is available on the internet freely. So you can download it. So this summary of main changes we have covered. Now there are, as I informed you, there are two types of standard: a general standard and asset standard. So general standard, these we all are aware about this, but just for a revision purpose, this meaning or definition is provided under the IVS. So general standard, these set forth requirement for the conduct of all valuation assignment, including establishing the terms of a valuation engagement, basis of value, valuation approaches and methods, and reporting. So they are designed to be applicable to valuation of all types of asset and for any valuation purpose. Asset standards. So asset standard include a requirement relating to specific types of asset, and this requirement must be followed in conjunction with the general standard. So when performing a valuation of a specific asset type. So these we have to keep in mind while doing the valuation assignment. What exactly is the meaning of general standard and what exactly is the meaning of asset standard. Now, so these are the general standard under IVS. As we are aware, total 5 general standard: 101 to 101 to 105 on scope of work, investigation and compliance, reporting, basis of value and valuation approaches and method. And there are 8 asset standard now. Earlier there were 7 asset standard, and now actually 8 asset standard, starting from IVS 200 to IVS 500. And this IVS 230 on inventory is a new addition. Moving forward, this is means whatever important guidance is there from this inventory means valuation standard, that I have tried to highlight in this PPT. This is again not exhaustive. Whatever I found important, that only I have incorporated in this PPT. So means you may go through the entire valuation standard. So principles contained in the general standard apply to valuation of inventory and valuation with an inventory component. So either it is inventory or wherever we are doing valuation of an entity, so inventory will be one of the component. So that means that will cover this requirement. And the standard contains additional requirement for valuation inventory. So primary requirements are as per the general standard. Additional requirements for valuation of inventory is under these newly added standard. So this inventory broadly includes, as we are aware, means raw material, works in progress and finished goods for a manufacturer. And for a trader or trading company, it will be only finished. So inventory broadly include goods which will be used in future production processes. So that is raw material, parts and supplies, or it will be used in production processes, that is work in progress, and awaiting sale, that is finished goods. And the standard focuses on evaluation of inventory of physical goods that are not real property. So that is very important. This will not cover evaluation of real property, as the numerous and varied aspect of real property inventory were not considered or contemplated in the preparation of the standard. So evaluation of real property is covered under IVS 400, which is on real property interest. And while the book value of inventory only includes historical cost, the profit earned in the production process, which reflect return on asset utilized in manufacturing, including working capital, property, plant and equipment, and intangible assets, are not capitalized into the book value. So that is, as I informed in the beginning itself, for accounting, actually the principle of conservative approach is adopted. So their profit will be accounted for only on a realization. So that is how it is not capitalized into book value. And as a result, the market value of inventory typically differs from and usually higher than the book value of inventory. So the inventory valuation are performed for a variety of purposes. It is the valuer's responsibility to understand the purpose of valuation and whether the inventory should be valued, whether separately or grouped with other assets. So this is also very important. Can it be valued as a part of a current asset, or it should be valued separately? So that decision has to be taken by the valuer depending upon the ground realities. So this is guidance is there. A non-exhaustive list of examples of circumstances that commonly include a inventory valuation component is provided below. So again, this is a non-exhaustive list. This is just illustrative list. So financial reporting purposes. So financial reporting purposes, as we are aware, this Ind AS 2 is on a valuation of inventory. So that financial reporting purposes. For tax reporting purposes, inventory valuation needed, and frequently for transfer pricing analysis, estate and gift tax planning and reporting, and ad valorem taxation analysis. And inventory valuation may be the subject of litigation requiring valuation analysis in certain circumstances. So valuers are sometimes asked to value inventory as part of general consulting, collateral lending, transactional support engagements, and insolvency also. So these are the requirements where inventory evaluation will be needed. And again, this is important. So in accordance with IVS 104, a basis of value, a valuer must select the appropriate basis of value when valuing the inventory. So when selecting an approach and method, in addition to the requirement of these standard, a valuer must follow the requirement of IVS 105, which is on valuation approaches and methods. So the market approach with reference to market activity involving identical or similar good has only narrow direct application for valuation of inventory. So such application typically include inventory of commoditized products or inventory in which market exists for the inventory at an interim stage in the production process. So for a non-commodity traded product or product that a market exists at an interim production stage, such selling price must be adjusted downward to account for the disposal effort and related profit. So in interim stage also this valuation will be required. So here I can give an example also within a production, means in the middle of production process, how it can be how a market can be found. So here just for example, I would like to highlight one thing. So in our Baroda refinery, this is again just one example. Oil marketing companies, means oil refinery companies, they undertake such transactions on a routine basis. So this refining process, as we are aware, it is consisting of different processes. First, crude oil is entered into a refining process. Then first thing with LPG or means gaseous form of that means crude oil that will be extracted, followed by a different petroleum product starting with kerosene. So this kerosene oil, it will have a different usages, like kerosene oil, which is used in household or for a public distribution system, PDS. Then kerosene also has industrial uses. apart from that, actually, this kerosene is also used in petrochemical and manufacturing of various detergent products. So, according to that, actually, in one of the processes, whatever kerosene is produced at the first level, it will be rich of paraffin contents. So those paraffin contents actually are used by the detergent manufacturing company. So what will be done? Company A will or refinery A will send that kerosene forward stream to the detergent manufacturing company. That detergent manufacturing company will extract that paraffin contents. And once that is done, that whatever kerosene is there, that will be returned back to the refinery company. So whatever is the cost of that extraction, that is paraffin content, that billing will be done for that. And whatever kerosene is received back in the refinery, it can again have different usages. Like that kerosene can be sold in the market as it is, means either for a PDS or public distribution system. Now it is reduced in India. Now we are due to environmental concerns, but in villages it is still used. So it can be used for a household. It can have industrial usages. Or if a kerosene is refined more, it will become the ATF or aviation turbine fuel, which is used in aircraft. And same kerosene, if further processed, we can have this high-speed diesel also. So during the production processes, there can be different usages of the unfinished or semi-finished goods. So as a valuer, this just I gave you the example. So as a valuer, actually different industries or different business entities or different companies, it will have its own peculiar manufacturing or production processes. So a valuer needs to be conversant with that those types of methods or practices in the trade. Just give me 1 minute. So this is a para 50.3 and para 50.4. So while the market approach is not directly applicable, in most instances, valuers should consider market-based indications to determine the selling price as an input for other methods. And other observable markets may provide insights on the return attributable to the manufacturing and disposition of asset that can also be leveraged for inputs into other methods. So such returns are typically considered for to exclude returns attributable to the intellectual property. So examples are given of distributor profit margins or the contract manufacturer. So due to shortage of time, we will not go into detail of this. Then valuer must comply with the paras 20.2, subpara 3 of para 20 of IVS 105, which is on valuation approaches and methods when determining whether to apply the market approach to the valuation of inventory. Now, this is in addition, valuers should only apply the market approach to value inventory if both of the following criteria are met. So, important guidance given to valuer when to apply the market approach. So, information is available on arm length transaction. So, in other words, information available is with reference to unrelated parties. So if that information is available, then a valuer can use the market approach involving identical or similar inventory on near the valuation date. And number two, sufficient information is available to allow the valuer to adjust for all significant differences between the subject inventory and those involved in the transactions. So where evidence of market price is available, valuer should make adjustment to these to reflect differences between the subject inventory and those involved in the transaction. So these adjustments are necessary to reflect the differentiating characteristics of the subject inventory and those involved in the transaction. So such adjustment may only be determinable at a qualitative rather than a quantitative level. So once it is at a qualitative level, the judgment of the valuer will come into play, assumptions of the valuer will come into play, subjectivity will come into play. So very important means skill of valuer will be tested while applying this adjustment on a qualitative basis. Quantitative, so it is slightly easier, I will say, but qualitative always challenging. Now this is para 61. So valuation of inventory using income approach requires allocation of profit contributed pre-valuation date versus the profit contributed post-valuation date. So see, it is not always that the valuation will be required at the end of a accounting period. Maybe it is a quarter or a half year or a yearly. Many times, depending upon the situation, valuation will be required in the mid of the accounting period, like 15th of March or 10th of March. So there again, these challenges valuer will come across. So a pre-valuation date, what is the profit, and post-valuation date, what can be the profit. And for that, actually, these two methods are prescribed. Top-down and bottom-up. So top-down and bottom-up approaches or methods, we all are familiar. That is widely used. So that is used in inventory also. Like foreign investors, they use these top-down methods while taking decision for investing into a particular company. And retail investors like us, while making investment in equity of a company, we follow this bottom-up method. So these methods we are reasonably familiar with. So same methods are employed in inventory also. So what will be the modalities in inventory? So this is a top-down method, para 60.5. Again, I have taken just a summary of that. This para is in detail. So these are the steps required in top-down. So in investment decision, as we are aware, under top-down, an investor will start from the macroeconomic conditions of a company, followed by sector of a country, followed by sector analysis, followed by industry analysis, and then company analysis. So in inventory, actually, it will start with estimating the selling price, then estimate the cost to complete, then subtract the cost of disposal, and subtract the profit allowance, and consider the necessary holding costs. So this is a top-down method of inventory valuation. So here it is starting from a selling price and ending at a cost price. So it is considered to be the top-down method. Similarly, we have this this is detailed guidelines on top-down methods. We will not go into detail of that. And this is a bottom-up method. So that is para 60.10 and 60.11. So here it will be a reverse cycle. So in top-down, it will start with a selling price. In bottom-down, it will start with the cost price. So determine book value of the subject inventory, add any cost of buying and holding already incurred, add any cost towards completion already incurred, and add profit on total cost already incurred. Now, this may sound easier, but in reality, it is very challenging actually, because to ascertain a cost towards completion already incurred in a processing company which is having a processing 24/7. There are many industries which are 24/7 process companies. So there to ascertain this cost will be a very challenging task. So any cost towards completion already incurred and a profit on a total cost already incurred. So that is because the profit will comprise of intangible assets of the company. It will comprise of the plant and PPE or means plant and machinery of the company, or plant property, plant and equipment of the company. So that actually is a very challenging task. So this is a bottom-up approach. When determining the cost already incurred, a valuer should consider internally developed intangible asset that have contributed towards the completion effort. So again, this is very important, as we are aware actually internally developed intangible asset that are not reported in the financial standard as per guidance given under the accounting standard. So world over, this issue is there because internally developed intangible asset, a value of that is very high. So that is actually not reported. But while making a valuation, a valuer needs to consider that. So that cost of internally developed intangible asset, again a very challenging assignment. So in other words, for doing the valuation, doing the valuation of inventory, a valuer necessarily needs to do the valuation of intangible assets. So unless that means it is there, that will be difficult. So that is internally developed intangible asset. And this is the third approach, which is cost. So far we have covered market. So market mainly means relating to that market price. Income, we have seen two approaches, bottom up and top down. Now this is a cost approach. So the primary method to value inventory is the replacement cost method. So raw material inventory is typically valued using the current replacement cost method. So as I told you earlier also, it will be very easy to get a replacement cost of the raw material because it is readily available in the market. So valuer must comply with para 60.2 and 60.3 of the IVS 105 valuation approaches and methods when determining whether to apply the cost approach valuation of inventory. And current replacement cost method may provide a good indication of market value if inventory is readily replaceable in a wholesale or a retail business. So example, a raw material inventory. The market value of raw material and other inventory may be similar to the net value as of valuation date, but certain adjustment should be considered. So book value may need to be adjusted to FIFO basis if raw material price fluctuate and provide inventory turnover is slow. So book value may need to be adjusted for changes in market pricing. So this is a theoretical guidance which is given. But I will draw your attention more particularly to subpara E. The book value may need to be increased for any cost incurred in connection with raw material preparation, that is purchasing, storage and handling. So again, this will be very challenging to ascertain the storage and handling cost in a big company actually. So these are the special considerations for inventory. So identification of value, added processes and returns on intangible asset. So this is a special consideration. Then relationship to other acquired asset, obsolete inventory, creation of a reserve for that, and unit of account. So a company can have a different unit of account for different commodities or for different products. So that also to be considered. So I can give you example also in a petroleum company. This LPG is sold in cylinders, like in our household also we get LPG. That will be always means a unit of account will be number cylinder. But when this HSD or high-speed diesel is sold in liquid form, then unit of account will be kiloliter or liter. LPG again it will be means kg. So like that, different unit of account can be there. Then identification of value processes and returns on intangible asset. So that is very important, para 90.1, 90.3 and 90.4. So valuation of inventory involves an allocation of profit between the profit earned pre-measurement date and profit earned post-measurement date. So in practice, profit earned may not be proportional to expenses. In most cases, risk assumed, value added, or intangible contributed to the inventory pre-measurement date are not the same as those contributed post-measurement date. So very important. So valuer should distinguish between value added cost and those that are not value added. So a material portion of cost of goods sold may not be value added cost because it does not contribute any of the profit to the inventory. So this is a best example of what is value added cost and what is not value added cost. So for a company that owns internally developed intangible asset that contribute to an increase in the level of profitability, the return on and of those intangible asset would be included in the total profit margin of the business. However, whether intangible assets are owned or licensed, the market value of the inventory would be the same. So this is a very challenging assignment. So here we can take an example of a loyal customer. Many company will have its own loyal customer. Whether means they are getting Pawan Kumar ji. So whether that customers of a particular company they are concerned with the quality and quantity of the product. They are many times not concerned about the value. So that is a factor, means loyal customer is a factor which adds to the profitability of a company, and it is a customer list is a type of intangible. So that allocation is also a very important role or challenging role for the valuer. And this is returns on intangible. So valuer should determine the extent to which technology or trademarks and customer relationships support the manufacturing and distribution processes, and whether the returns are applicable to the entire base of revenue. So if intangible asset has been utilized to create the inventory, example, a manufacturing process intangible, then value of the inventory would be increased. And conversely, if the intangible asset is expected to be utilized in the future, at that time of disposal, the value of inventory would be decreased. So this is very important. And relationship with other acquired assets. So valuer should maintain consistency as appropriate between assumption used in inventory valuation relative to valuation of other assets and liabilities. So obsolete inventory, that is also very important in inventory means business entities having a large quantity or maintaining a large quantity of inventory. They will always face this situation of obsolete inventory or non-moving inventory. So this valuer should account for obsolete inventory reserve balances, and inventory reserve balances should be applied to the inventory in which the reserve applies rather than netted against the entire inventory balances. So in a big company, we can take FMCG company. So FMCG company will be dealing in multiple products, 10, 20, 50. So here that guidance is provided, whatever reserve is there for obsolete inventory, that should be applied to that particular item of the inventory instead of applying into the entire cost of the inventory, which can be consisting of multiple items. So that is guidance provided here. And typically the obsolete inventory adjusted for the inventory reserve would not be valued as it has been adjusted to net realizable value. So the valuer may need to consider further write-downs if a market value is lower than the net realizable value. Unit of account, again very important. So for purpose of inventory valuation, it is often appropriate to assume inventory is one homogeneous set of asset. However, it is possible for a profit margins, risk and intangible asset contribution to vary by product or product group. So if the profit margin, risk and intangible asset contribution vary by product or product group, and the relative mix of inventory being valued does not match the assumed sales mix used to develop the assumption for the valuation, the valuer should assess the different groups of inventory separately. So this will be applicable to the companies or business entities dealing in multiple products. And so there this will come into play. Unit of account, very important again. Now we will move to this what guidance is provided under Indian Accounting Standard 2 or Ind AS 2 inventories. So here these are the important definitions. So inventory are assets held for sale in the ordinary course of business, process of production for such sale, or the form of material. So as we have seen under IVS also, because IVS has a borrowed definition of inventory from IFRS, and this Ind AS again is based on the IFRS. So same, almost same definition is there for raw material, work in progress, and finished goods inventory. But this is very important because valuation to be done either at cost or net realizable value, whichever is less. So what exactly is the net realizable value, or what is the meaning of a net realizable value? That is provided under Ind AS 2. So net realizable value is the estimated selling price in the ordinary course of business, less the estimated cost of completion and the estimated cost necessary to make. So here we have to keep in mind there is a difference between a net realizable value and the fair value, because as a valuer we will be required to do the valuation based on fair value. So we have to take or keep in mind that fair value is always market specific, whereas this net realizable value is entity specific. It is not market specific, because see, the estimated selling price in ordinary course of business, same commodity, it can differ from one business entity to another business entity. And so this price of net realizable value of say 1 lakhs, so it can be different from one business entity to another business entity, depending upon what percentage of profit margin he is taking. So that is entity specific. So that we have to keep in mind. Fair value is the amount for which an asset could be exchanged or a liability settled between knowledgeable billing parties in an arm's length transaction. So this is again fair value measurement. We have a different standard. So this fair value definition is almost same. So net realizable value, it refers to the net amount that an entity expects to realize from the sale of inventory in the ordinary course of business, whereas the fair value reflects the amount for which the same inventory could be exchanged between knowledgeable and billing buyers and sellers in the market price. So as I informed you, there's a former or a net realizable value is an entity specific value, and whereas latter is not, that is fair value is market specific. So here is the challenge for a valuer. If we rely on the value which is reflected in a financial statement while doing the valuation, then probably that estimation may not be correct, or it may not be according to international valuation standard. So these aspects to be considered. Now, what is the objective of Ind AS 2? So determination of cost, subsequent recognition as an expense, and guidance on cost formula. These are the objective. What is the scope? So it applies to all inventory except Ind AS 32 and 109, that is a financial instrument. So inventory of a financial instrument, this standard will not be applied. And agricultural, because a separate accounting standard is there on agricultural, that is Ind AS 41. And this valuation principle, so how inventory measurement will be done. So this is the inventory principle, that is cost formula, and net realizable value. So guidance on this is provided, and recognition will be done as expense. And what are the requirement of disclosure in financial statement? So I had shown you that practically from Indian Oil financial statement. So that disclosure requirement, again, very important. So this inventory valuation, so cost will include a cost of purchase, which shall include a non-submittable tax. That is means the tax on which input tax credit is not given. Earlier, this was in excise regime, as we are aware. The terminology used was submittable, and now in a GST era, it is input tax credit. So this cost of purchases, which shall not include means non-submittable taxes, transport, insurance, and handling. Cost of conversion, that is fixed overhead and variable overhead, and other cost, that is cost incurred in bringing the asset to their present position. And cost will exclude this abnormal wastage, storage cost, administrative overhead not related to production, selling and distribution cost, and interest cost. And a net realizable value is the estimated selling price in the ordinary course of business less estimated cost of completion and estimated cost to make sale. And these are the different techniques. So this is a standard cost. So all these are techniques, that is a standard cost or retail method. So average percentage of each department is often taken. So these are the techniques, and there are actually various techniques for valuation of inventory or measurement of the inventory cost. Now these we have already covered of BPC. Then cost of purchase. So cost of purchase of inventory, it includes the following cost. So purchase or buying price, taxes and duties, transport, handling and other costs, and trade discount and rebate. And this is about cost of conversion. So cost of conversion include all costs that are directly related to the unit of production, and it also includes a systematic allocation of fixed and variable overhead that are incurred in conversion of raw material to fixed finished goods. So, and as we are aware, there are a fixed cost and a variable overhead. So, how to take a allocation of a fixed cost and a variable overhead at different stages? So that guidance is given here. And these are the other costs. So, other costs will include abnormal amount of wasted material or labor or other product cost, storage cost, unless those costs are necessary in production process, administrative overhead that do not contribute to bring inventory to their present location and condition, and the selling cost. So these are the example of other costs. And for a means the cost of inventories for a service provider. So that guidance is also provided under Ind AS, because this is the era of service providers. So that guidance is also provided under Ind AS, how to do the measurement of inventory cost for a service provider. So that is provided here. And these are the disclosure requirement. So accounting policy adopted. So these, as I told you, these disclosure, if we see practically, means annual report of a reputed company, then we will have a first-hand knowledge of the disclosure. And I had shown you that disclosure made by Indian Oil in its annual report. So that is about disclosure requirement under Ind AS 2. So these we covered actually IOCL. So with these actually from my side it is over, and this is a good quote to end the this PPT. The more inventory a company has, the less likely they will have what they need. So every company will need the profit. And so if you maintain more inventory, so as means always the management of inventory, it is a challenging task. It should not be excess. At the same time, it should not be less also. So that is there. And I thank each one of you from bottom of my heart for giving your attention. And now we will have open forum. So if any questions are there, you are free to ask. Whatever means organizer permit the time.
Sir?
Yeah, please.
Sir, in this top-down method, don't you feel that for kind of mortgage valuation for banks and all, the value will increase if you go by top-down method?
Sir, mortgage, it is a charge on the inventory. Okay, sir. Mortgage means it is a charge of inventory. Okay. So there means selling price means which type of inventory again you are talking, citing a means real life example, sir. You have come across. According to me, it should not make any difference, sir.
Suppose the price of a product is say 100 rupees. Okay.
Okay.
Now maybe it might be coming through 5, 6, processes. Now the first process is done, or maybe the second process is done. Who is going to tell you when we go for valuation? Nobody will help you in all that. Kaun sa item mein kitna process hua hai already. And once you add on the processes, the value increases. Now, if you go by top down, suppose one unit has got only one operation done, that means the valuation has not increased that way. But ultimately, if they say, if the client says four in between processes has been done, then we have to follow that.
Yeah,
And-
very true, sir. I fully agree with you. And what I will tell, sir, that this top down is not the only method, sir. That is a part of income approach, as we have seen. So there are three different approaches, sir. Market approach is there, income is there, cost is there. And as that guidance is given under IVS, mainly it is done through cost approach, sir. So depending upon the ground reality, it is not compulsory that valuer will necessarily follow this top-down approach. Depending upon the actual information available or the ground reality of each assignment, sir, a valuer will select the best approach and the methods.
Sir, who are competitive to inventory valuation? SFA valuer or P&M valuer?
Sir, I think during the session we have discussed this issue twice actually, in the beginning and in the middle of the session. Actually that clarity is not there, sir, actually. Means going forward, when some regulator is there on valuation, we may get that clarity. That, sir, I took up that issue because I expected question on that. So I
Yes,
took up that in the beginning itself, sir.
I just
Sir, is there any, sir, I would like to ask two questions, Yogesh sir.
Yeah, please come, let's.
Is there any provision of depreciation by the passage of time in inventory valuation, particularly when technology is obsolete, is there, electronic industry, etc.?
Yeah. So see, Kamlesh, it is very specifically mentioned the asset on which depreciation is charged, that will not be regarded as a part of inventory. So that inventory, it will be have another implication, that is realizable value. So that will be covered under the realizable value. So whatever reduction is there in the pricing or the cost, whatever we may call, that will be taken care when we consider the realizable value. So, and whatever valuation means, whatever inventory is reflected in a financial statement, it is as I have told, it is at post or realizable value, whichever is lower. So that is how I gave the example of BPCL and IOCL. IOCL considerable reduction of 10,000 crore plus during this COVID period. So that will be recognized indirectly in the profitability.
Sir, I want to ask one more question.
Yeah, please.
What are the thumb rules if any losses are permissible in inventory, like some oil is coming in the jetty and it is conveyed to the tank farms and again supplied to the other refineries? So any losses or any thumb rule is there to consider the valuation?
Yes. See, I will give you example of petroleum industry. So petroleum industry in excise law itself, some means loss percentage are recognized. Like see petrol pump, you take an example of a petrol pump. So petrol pump, it is in liquid form. So that it cannot be if 100 liter is sent from the depot, they will get 100 only. And so that permissible limits wherever necessary are fixed in the law itself. Many times. So that if we refer to that particular law provision, probably we may get the guidance.
Thank you, sir.
Sir, for obsolete inventories, I think depreciation can be allowed.
No, sir, it is not. We can create the reserve, sir. So you have to be very clear. Depreciation is allowed only on fixed asset. This is a current asset. This inventory is part of a current asset, sir. So no depreciation provision. We can create a reserve, but no provision for having depreciation on a current asset, including inventories.
Sir, for those items that are obsolete in nature.
Sir, the obsolete, that means your it will be covered under net realizable value. You will reduce your net realizable value, and accordingly you will report in your financial statement. So means indirectly that aspect has been taken care of, sir. So whatever reduction is there due to obsolete inventory in the cost of inventory, that is reflected in the cost of inventory, which is shown in the financial statement, sir.
Sir, thank you, sir.
Thank you. Thank you.
Yeah, I've got one question, sir.
Please,
Yeah,
Parthaji, please.
Yeah, this is regarding the inventory, that's the finished goods inventory. Now,
Okay.
the pricing of the finished goods inventory, is, for example, a tire company, they've got a huge finished goods of tire, and the company has been closed temporarily.
Yes.
Now, the market rate I can always find out, but the cost of goods sold, I don't have the ledger, the stock ledger. In the absence of the stock ledger, I can use the market rate less profit margin, or what is the thumb rule to value of those such inventory?
So Dada, actually the purpose of a valuation is very important. If you are doing a valuation for a financial reporting purpose, sir.
No. So valuation is for the NCLT.
I am coming to that. If it is other than for financial reporting purpose, then you will be under which low provision you are doing. Supposing that low provision you have to ascertain the fair market value. So fair value. So fair value is at market price, sir. So what means that if you go through the definition of fair value, so that is the transaction value at a marketplace between two knowledgeable and all, sir. So there you can very well
market
consider.
rate of those tires I can always find out.
Yes, current market rate always you can find out, sir. That is readily available for a item like tires, sir. Again, that will depend upon which brand
there is one
there.
conflict here. Now, if you go by the stock ledger, the stock ledger will not have the profit margin built in. The stock ledger will be based on the cost of production.
Yeah, historical cost, sir.
Historical cost. But that I don't have. So if I take the market value, then it will be higher than the cost. I can always take.
That is, sir, provided because see, whatever a profit earned on the manufacturing process, that is not a part of financial statement. That we don't recognize, sir. Whatever means infrastructure you employ for manufacturing process, so naturally you will expect certain return on it. So that return according to accounting principles or according to accounting standard is not considered. So that is how I told in the beginning itself, this financial statement, it is employing conservative approach. So what is conservative approach? You recognize the loss immediately, profit you delay till it is realized. Whereas when you are doing a valuation as a professional, necessarily you will have to consider the fair value. Now, whatever is the fair value, that difference between your books of account and fair value will nothing but the profit margin. So that profit margin you can very well ascertain through the industrial practice. And if it matches, then you can have a confidence. Yes, this value is correct, sir.
Okay. Thank you.
Hello, sir.
Yeah, please, sir.
Sir, I have some question not related to inventory valuation, but generally related to registered valuer.
Okay.
Sir, while valuing a startup, when management give us projections of year end, so whether we should discount it by taking them at year end, or we should consider them as a mid-year value, because cash flow will be coming during the entire year.
So that mid-year convention and end-year conventions are there, sir. So depending upon the ground reality, you can adopt one practice. Supposing by adopting a year-end convention, there is a sizable difference in the valuation. Okay, sir. Then you would like to have a mid-year convention. And so that whatever convention you are adopting, that should be part of your valuation report, sir.
Okay. So
if that difference is not, if that difference is not much, sir, then you can adopt a year-end convention, because the mid-year convention, and there is no end to it. Why not monthly convention? Why not quarterly convention? Why not daily convention, sir? So that valuer, depending upon the ground realities, he will have to decide, and whatever he is adopting, that he will clarify in the valuation report itself, sir. That is my take.
Okay,
or
sir.
my
Sir, my
understanding,
second
sir.
question is, in case of CIRP, corporate insolvency resolution process, sir, I have recently got a case regarding the valuation of SFA, and it is my first case. So there are some debtors in the books of account and some cash and bank. So what documents I need to ask? What documents I should ask the management?
Sir, first thing, you will ask n number of document, but whether you will get, that is the question in CIRP, because we all are sailing in the same boat. I am also a registered valuer in SFA. So in cases of CIRP, it is very difficult to get the required documents, sir. But in your example, supposing a debtor is there, okay, sir. So you can ask for the contracts of each transaction, or you can do ABC analysis of debtors, and you can ask a contract for major amounts. Then you can ask for aging of the debtors, sir. And you can also ask if these outstanding is beyond the credit period which is given by the entity, then what are the reason why whether means, and there is a chance of default by those debtors and all. So all these types of question you can form, sir. You are a professional, so I think once you start writing the question, you will be able to make many questions. But that another, I am also insolvency professional also, so I know, sir. In cases of CIRP, very difficult to get a document, because in many cases either promoters are not available or absconding or in jail. So depending upon situation, sir, you will have to decide.
So, sir, for example, the debtors in the books of account are of value 17 crore, and I have got the document of something valued, say 12 crore rupees. Then how should I value the amount in report?
See, sir, such situations, you will appreciate such situation. There cannot be specific guidance across the table unless one go through all the documents, sir. So that is what the skill of a valuer, sir. And on such matters, there cannot be any specific guidance, sir, based on the ground reality. You gave example, instead of 17, you have 12. Then what are the reason for not having balance 5? So once you get
sir,
those
in case I
reasons,
am
then you
satisfied
analyze.
that only recoverable amount is only 12 crore, then I will show the value as 12 crore instead of 17 crore.
Yes, that is means your decision, sir. Again, I will tell.
Sir. And sir,
it is depending upon the ground.
how a valuation of securities and financial asset is different in case of liquidation, because there is a limited market time, market period available. So what are the difference between liquidation valuation and CIRP?
Go through the liquidation process regulation, where you are required to ascertain net realizable value. Under CIRP, it is means fair value and liquidation value according to international valuation standard. But if you go to liquidation process regulation, then it is a net realizable value as per a company's registered valuer and valuation regulations. So this is not that our subject of today. Probably we will request organizer to have different session on IBC valuation. Then we can discuss it in greater detail, sir.
Okay, sir. Okay. Sir, one last question I have. Whether
you have prepared entire question paper for me,
no, sir. Sir, just one general question. Whether we are, as a registered valuer, are we allowed to share referral fees with other RVs or IPs?
No, sir. How that concept is not there, you will be in trouble if you do that, sir. You again refer to the code of conduct for registered valuer. You will get answers from that, sir.
Okay, sir. Thank you very much, sir.
Code of conduct, you go through it, and kindly go ahead.
Okay, sir.
So if any further questions are not there, then probably we will end the session. And as I can see from the chat box, means many of you have appreciated my efforts. So I am again thankful for that. And so I will hand it over to the organizer now, Sarma sir now.
Can you share the PPT, please?
Definitely, sir. I will share it with the organizers, and in turn they will forward you, sir.
Okay, sir. Thank you.
Thank you, sir.
Thank you very much, sir. Thank you, sir. Thank you so much.
Thank you very much, sir.
Thank you. Thank you. Sarma sir, are you there, sir?
Thank you very much, sir. Thank you very much for good session.
Thank you very much, sir.
Thank you very much, Mr. Tapan. Thank you.
Sarma ji, are you
Ah,
there?
yes, sir. Yes, sir.
Thank you,
Please take
sir.
over, sir. Please take over, sir.
Ah, yes. Yes, sir. Yes. Am I audible, sir?
Yes,
Yes, sir.
very well, sir.
So
Very
we
well.
are coming to the end of this scene. Thank you very much, sir. Thank you for your associating with us and taking this.
Sir, now you are not audible, sir.
Achha, not audible.
Now it's okay, sir.
रीना इधर आ ये आशीष शूरी का ईमेल आया हुआ है इस साउथ का मैंने लिखा है इधर
Why it is? Okay, thank you, sir. Thank you very much. You have covered the topic very nicely, and I've seen you received very good feedback. Most of the participants have benefited from this, and I think all the participants have benefited from this. And so thank you very
Sir,
much.
your voice,
Participants.
sir, your voice is not audible properly.
I don't know what is happening. What is happening?
Sir, can we leave now?
I'll. Okay, sir. Okay.
Thank you.
Okay. Thank you. Thank you.
Thank you, sir.
Thank you, one and all. Thank you, one.
Thank you. Thank you, much.
Thank you.
There is some problem in.
Thank you, sir.
Thank you very much.
Thank you.